Let's get to our next management then. We have Mr. Ranjit Rath, the Chairman and Managing Director at Oil India and Chairman at Numaligarh Refinery, who joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. We've got a lot of questions for you, coming to you in just a bit. For the time being, just highlighting the three broad points we're looking at. FY26 volume growth outlook. That's what we want to know. The GST hike impact on the exploration services, the impact out there. And finally, the impact of the rupee volatility as well is something that we're looking to understand. Well, Mr. Rath, thanks a lot for joining in. Let's get to the first point. When is the Numaligarh refinery expansion expected to come through? I think it was expected in the next few months. You could give us an update out there. And how will it aid GRMs as well as the overall earnings of the company?
Okay. First of all, thank you very much for having me. Good morning to you and all your viewers. We had an excellent AGM yesterday, followed by a press meet. Very happy to be here. Number one, the year just passed by, FY25. We had a landmark year with highest ever production of crude oil and natural gas. That's 6.71 million metric ton oil and oil equivalent. As far as FY26 is concerned, we are looking at about 7.5 million metric ton of oil and oil equivalent. We are looking at a much higher number of drilling. We are looking at a much higher number of exploration acreage and seismic data coverage. As far as Numaligarh is concerned, I must give you an assurance that the expansion is on track. As we speak, the primary units, that is the CDU and the VDU of 6 million metric ton crude throughput, we will start commissioning by December 2025. And the DHT, that is diesel hydrotreating unit, will also be ready, but we need to have the sulfur unit ready first, because I would like to explain that these are all batch basis commissioning and always linked. Therefore, we would start doing the remaining units commissioning by 31st March. By FY 2027, we would be looking at about 40 to 50% capacity utilization and some time of to 28 for complete stabilization of 9 million metric ton. The second question that you had asked, before that, I would also like to say...
Just one more point, sir. So on the Numaligarh refinery, what will be the initial capacity utilization levels, if you could help us out? And when do you hit peak capacity? So we clear that out of the way.
Okay. So currently, the capacity utilization of a 3 million throughput is 100% plus. Last year also, it was 100% plus. And going forward, we are looking at that number also. In addition to that, beyond the Numaligarh refinery expansion, Honorable Prime Minister has already laid the foundation stone of a polypropylene unit. That's another 7,000 crore investment. The basic design is in place, the detailed design is in place, the licensor selection is in place. So we are looking at 28, 29 to complete that as well. That will give us 4 as the index number, they say, petrochemical intensity index. So that's the Numaligarh story.
Okay, got it. All right. So I just want to clear that the longer term targets on both oil as well as on gas, I think you had mentioned around 4 MMT on oil as well as 5 BCM of gas. Right. By when do you hit these levels? If you could break it up for us, sir, between both of them, 26, 27, 28.
So it's like this. 4 million metric ton while you produce crude oil, movement of crude oil or transportation of crude oil is primarily done through the infill lines and then the bowsers, and then you have the trunk line to feed the refineries. The gas piece is contingent upon having a robust evacuation facility. So currently we are doing about 8 million standard cubic meters per day gas evacuation in the regional customers. And we are looking at taking it to 13 million standard cubic meters per day. And that is going to happen by the connectivity of Northeast gas grid. The phase 1 of Northeast gas grid has already reached Numaligarh from Guwahati. GAIL has already connected the mainland India to Northeast by taking the pipeline to Guwahati. We have one dedicated line, which is Duliajan to Numaligarh. The capacity expansion is expected by this year end from 1 million standard cubic meter to 2.5 million standard cubic meters per day, which will cater to the Numaligarh refinery expansion post. We also have a fertilizer plant which has come in there through the Namru 4, which is a urea and ammonia plant, 10,600 crore investment. Oil India has got a stake of 18%. Government of Assam has got 40% investment. There also, we are looking at a 0.7 million standard cubic meter per day natural gas supply. Once the Duliajan feeder line gets connected to the mainland pipeline, we will be able to evacuate minimum 5 to 6 million standard cubic meters per day. That will give us the evacuation opportunity. Till such time, we have already strategized our drilling program, and we will be prepared to generate or develop or produce 5 BCM of natural gas. As far as crude oil is concerned, we have enhanced our drilling efforts. Our rig counts are going to be 28 to 30 in number. Last year, we had spotted 70 wells, completed 59. This year, our target is to do 80. Basis this, we intend to achieve by this year end 7.5 million metric ton oil and oil equivalent. And going forward, it will be 8.5 with 4 million metric ton of crude oil.
Okay, 7.5 million tons this year, 8.5 million tons the following year.
Absolutely.
Sir, any clarification?
No categorization.
Okay.
This is from the production of our near field exploration efforts, from our mining leases. Should there be any new discovery from our exploration acreages, there will be addition to it.
Got that. Sir, there has also been an increase in the GST from 12% to 18% on exploration services. How big of a cost burden is that going to be for you, and will it impact your bottom line?
It would impact, but it is not much as far as the Oil India's balance sheet is concerned. This year, we are looking at about 300 to 400 crore for that matter.
Will be the impact on the bottom line?
Bottom line, we haven't calculated. We are just waiting to see how our investments will pan out. But the more or less impact is about 400 crore as far as the GST is concerned.
Okay. So because of this additional 400 crore, will there be any change in the kind of investments you would have made otherwise? Will you bring that down?
No. We are an E&P company. We will continue to undertake seismic. That's the data acquisition, processing and interpretation. We will do drilling, because without that, nothing happens in terms of our exploration efforts or in terms of our production efforts. So no change in the investment pattern.
Okay. So what's your own expectation of crude prices? Because there's so much pressure on India reducing its purchases of Russian oil. If that were to happen, there is a risk of crude prices moving up. I mean, as you make all these assumptions, what is your base case?
I wish I could predict, but the outlook that we have for ourselves is about $65 per barrel plus or minus. And as we speak today, it is 67. Two things which comes to my mind. The supply side has got a pretty good number, while there is a subdued demand. So we are looking forward to a $65 plus or minus per barrel throughout this year.
And plus or minus is what, sir?
We want assurance here. What we have done, realizing or having taken note of this outlook, we have actually initiated a lot of cost optimization processes within the company. Whether it is manpower rationalization, asset utilization, operational efficiency in terms of our productivity, in terms of our drilling efforts, in terms of our workover efforts, the turnaround time of our drilling. So all that has already kick-started.
Right. So what is the potential saving from cost optimization that you're targeting?
I would not like to offer any saving per se, But in terms of physical component, I can give you a perspective. When last year we were doing, say, about 50, 60 number of wells, this year we target to do 80 wells by virtue of optimizing the interlocation movement, the turnaround time of the drilling, and despite undertaking more deeper wells. Similarly, while last year we did about 290 plus workover, this year our target is to do 300 plus workovers, where we would like to do optimum cycle time for our workovers. And that is how we intend to operate. Plus, we will also have a good revenue stream, that is our outlook, from the refinery margin that we witness, which is going strong in case of NRL.
Okay, all right. So, final question before we let you go. ONGC and Oil India, where you all have signed a joint agreement, right, for 3 exploration blocks. Could you tell us what is the share breakup? Point number 1. Point number 2, give us some color on the total investment.
Okay, so it's like this. As part of earlier also, Oil India and ONGC are there together in couple of blocks. And one of them, as we speak, is happening in Bengal, that is onshore. As part of the OLP 9 bidding round, we submitted 9 bids, and all of them Oil India was successful to secure, out of which in one block, Mahanadi Deepwater, we are together 50-50. In one block in Meghalaya, we are together, that's an onshore block, we are together. One block in Cambay Basin onshore, we are together. Otherwise, as part of our portfolio, we have got one standalone block in Cambay Basin onshore, one standalone block in Meghalaya. But more importantly, Oil India has got, as part of its 1.12 lakh square kilometer of area of exploration acreage, 40,000 square kilometer of area in the Mahanadi and KG Basin of deep water and ultra deep water exploration blocks. There, as part of our investment commitment, the onshore blocks are easy. We don't see, because these are all lower depth wells. The commitment will happen as far as the deep and ultra deep water block is concerned. We are going to place the work order for engaging a deep and ultra deep water 2D and 3D seismic survey, which is about 800 crore to start with. Then once we establish the prospectivity, we will undertake about 3 to 4 deep water wells. That's possibly happening year after or year after that, because we require about 12 months to complete the seismic activity, which is going to kickstart from December. So that's the outline.
Thank you very much, sir, for joining in. This was a very comprehensive interview. Thank you for breaking down so many aspects of the company's business model.